And we should be live and visible to the community. Good to have you all here.
Guys.
Hi, everyone.
So happy to introduce the community who are watching this to Omer, Andre Sherben, and Vishnu Korde. Omer and Andre Sherben are from Blindex, and they are the core contributors there. I think it would be good to start off with Vishnu and Andre and Omer introducing a bit more about themselves and also about Blindex and StackOS. So Omer?
Yeah, first thing I just want to start off with is, right, this is our first ever StackOS live AMA on YouTube. So it's going to be an experience for us as well, just as much with, I think, Blindex as well. So we're excited to do this first one and hopefully a lot of lessons to learn from this one for the next. So, you know, for most people who have been part of the StackOS community, I'm Vishnu Korde. I'm the CEO and Chief Architect for StackOS. And I think Iman asked me to talk a little bit of my background. So, you know, I'm an engineer from University of Pune. You know, I have a patent in cryogenic engines, you know, which has been used in some nuclear reactors in India. And, you know, I've gone to States, you know, got my master's degrees in finance and international business. You know, I went to Harvard to finish my finance major. You know, and then across, you know, for almost my 11 to 12 years, I've been in the space of the cloud, trying to basically bring computations, you know, or moving computes for organizations which have billions of dollars in transaction, you know, from data centers to the cloud, right? So a lot of my work has been pretty much focused in the cloud area, and you know, I was one of the first few people, you know, who were actually working with AWS when nobody knew about them. Right, from the first services which Amazon just launched as a cloud service software for other people during those times. So, you know, I've got a lot of experience with them and how those things were built up over the years. You know, started a company called Integro, which was a decentralized learning management system. You know, and it was something like Canvas and Blackboard, but for the blockchain, right? And you know, we had all of our smart contracts living on Ethereum back then. This is 2017, 2018, guys. You know, our transaction fees were not as high. So we use that chain to be able to really give micro scholarships to people. You know, over the years, you know, we try to really decentralize our entire infrastructure. That means that all of our compute, which we were using for the decentralized learning management system, had to be brought in up for to basically out of my account, my own individual account in AWS. So we really, you know, stuck to the passion of decentralizing even the infrastructure part of things. And that's where we were. We built out the protocol ourselves. Our advisors came and said, hey, you know what, Vishnu, this is a great product. I think it's a big gap, a gaping gap in the entire blockchain space. Because all the projects, pretty much 99.9% of the projects which are decentralized or claim to be decentralized, have only the smart contracts running on blockchain, and everything else is running on centralized AWS servers of theirs. So that is kind of the uniqueness that StackOS brings in. That is the value proposition for the blockchain projects to be able to really bring that value. Hopefully show wonders in the future. So just building up the infrastructure layer for the blockchain space for the future, with all the new projects coming in, you know, call it gaming, the NFTs and whatnot, right? All of those require compute. You require artificial intelligence, you require, you know, databases which you require to be running at scale, and the compute itself, right? And how do you scale it on demand? Again, StackOS has stuck to the ethos of being an enterprise-grade compute. That means that all of our cluster operators, you know, we don't work in nodes, right? We don't have like, you know, 10,000 nodes, 10 nodes or whatever. But we have clusters which are operated by the community, and then each of our clusters have a combination of multiple nodes themselves, right? So we have stuck to the scalability nature of it, how to horizontally scale when demand kicks in. So that's how we have built it, and yeah, that's what StackOS and what we.
Perfect, thanks a lot. Omer, Andre, who wants to introduce Blindex?
Omer, go for it.
Great. So me and Andre here, part of the core founding team of Blindex, or the co-contributors for Blindex platform. Blindex is a multi-asset stablecoin platform. So essentially, we are a platform that creates all kind of different stablecoins. Can create stablecoins for currencies, for commodities, for stocks and bonds and indexes, and even real estate. So, for example, we can create a stablecoin for a specific currency like British pound or euro, or we can create stablecoin that is pegged to gold and oil and silver, and even stocks and indexes. So a stablecoin that is pegged to the S&P 500 or the Nasdaq. And if I want to take the vision, one step further, then why not use it for real estate and create a stablecoin that reflects the prices of a real estate area or NFT floor price. So imagination is the only limit here, and we can do all kind of variety of cool and new investment tools for the users. And the core element here is that we provide benefits and dividends for our users in the form of holding the assets and gaining yield on top of that asset without doing anything other than just holding the asset itself. So you can hold an S&P 500 stablecoin and gain yield for that in the form of dividends, and also stake that stablecoin in our platform and gain even more rewards and yield on top of that. We currently have 4 different stablecoins on the platform. So we have US dollar, we have euro, we have British pound, and we have gold. Actually, the first ever gold peg stablecoin that is backed by Bitcoin and Ethereum. So the first one ever in the world. Yeah, that's in a very short what we are doing. A little bit about myself. I used to work in the banking industry. Used to work with banks for a long time. I used to work in the payment industry. So did a lot of work there. But started my own knowledge in the blockchain space around 2015, 16, and decided I want to stay in that space for a long time and bring more value for my users, for people that are investing in the space, and do it in a very easy manner. And that's why the whole concept of Blindex is very attractive to me. I think the vision that we have, to empower our users and to help them gain, and to empower their savings, to protect them against, FX risks, or to provide them with more investment tools. That's something that for me, it's very, it's drive me every morning. So yeah.
So you quite literally got unbanked. That's the
on my way
awesome.
there.
Yeah.
Yeah. But Andre, sending the mic to you.
Sure. So Omer already introduced Blindex, but yes, it's basically our baby that we've been working on for the past, probably more than a year and a half now. I mean, our vision is really to bring the DeFi and all kind of sophisticated instruments in a simplified manner to the masses. And we have pretty big vision, but taking humble steps on the way there. Started with just a couple of stables. Now, as Omer said, we added another one and added gold, which we're quite excited about. But the vision is much bigger than this. It's basically really to tokenize everything and to make everything accessible to everyone in the world in the way which is completely unstoppable. And that's one of our strong links to StackOS, and the reason why we've been developing the whole platform on StackOS since even before it was officially launched. And because we believe that it's not enough to be decentralized on the smart contract level, but your front end and back end has to be decentralized as well, because the basic assumption is that probably 99% of the average users out there don't know how to interact directly with the smart contract. So even though this option exists, but if it's not accessible, it doesn't really matter. So for us, it's very important to work with StackOS and to kind of travel through this interesting times together, both technologically and then kind of from a financial or market perspective. It's all quite interesting these days. But I mean, in general, I've been around for a while. I've started building ventures in the late 90s and kind of never stopped. I did stop counting after the 20th, so I actually have no idea how many ventures I did start, but it's definitely more than 20. And I became an investor in kind of early mid 2000s. Was investing in startups. Did probably about 150 or so investments. Got involved in crypto in 2013, and basically since then never really looked back. I kind of went all in on crypto. Not in 2013, unfortunately, but a couple of years later. And basically since then, spending all of my time building and helping build infrastructure in the space and investing in cool stuff, cool technology.
Awesome.
Yeah, I mean, I think you missed out, Andre, your fundamental, what should I say, your introduction, right? You're a hodler, just like your shirt says.
Yeah.
So looking at the market right now, do you guys get nervous after all these years, or?
I mean, I can say that I'm smiling, and I'm not faking the smile. And the T-shirt is kind of I guess fit for purpose today. But seriously, like, I mean, everyone who's been around for a couple of cycles in crypto should know how to take 95% haircut on the value of their portfolio and still be able to smile and to operate normally. And if that's not the case, they are either overexposed and they invested funds that they shouldn't have invested, or they simply not cut for this kind of markets, which is fine because not everyone can do it. But I mean, I've seen my portfolio crashing by like the alts by 95 to 99%, Bitcoin by 90%. So it's this stuff happened. And that's one of the reasons also I always tell all of my friends and followers of my channel that it's very important to take profits when you can, and at the same time it's equally as important not to act along with the market. So typically it's much wiser strategy to do exactly the opposite to what the market does. If everyone buys, it's a good time to sell. If everyone sells, it's a good time to buy. So it's it's a bit contrary to like the common market sentiment, but it typically tends to yield much better results. But definitely don't panic sell your entire portfolio in order to rebuy at twice the price.
I bought my first Bitcoin in 2012, right? And I lost pretty much 100 Bitcoins of money. So, it's nothing. and over the years,
I mean,
the cycles now, it doesn't even matter anymore.
Yeah, I mean, I lost all of my early Bitcoins in Mt. Gox. So, I mean, that's like 100% loss. So,
Yeah, I think we saw that with every cycle in the last 3 months, that once the market crashes and everybody's closing in to start processing what's happening, then a few months after everything is blooming again and new technology and new projects are coming out. So that's the time to strap in and and build and come up strong at the end of the tunnel. So
I'm actually going to say that. Actually, wonderful point. Basically, I really love the bear markets. And it's not just because it can make you rich, but it is also because that is the time the real projects keep on delivering. And when the market is right, that's when people, the ones which have lasted the bear market, the ones which are successful also in the future. So and there are so many examples of that, right? And I think that's the one beauty of this entire process, right? When the StackOS started, it was not even, we didn't raise capital at all, right? We were building and we were still profitable. And by the way, StackOS at this point in time is still profitable organization in terms of deployments which are happening on StackOS, the payments which we're getting for the compute which are being used from all that point of view, right? And our VC venture capital is all the investments from VCs are pretty much to the par. 10% of the capital which we have raised is still on market making, right? So it's good to be in this position, and and when you're focusing on building the product, these market cycles don't really matter, right? It's all about the fundamentally how you're building and developing. And there is going to be time. There is going to be a time for Web3 to really boom. And if you look at the future, right, you will see a large portion of the new application deployments coming actually, or not the deployments, right, but the Web3 companies coming in would be actually replicas of Web2 organizations. And guess what? When you have applications like Facebook, right, coming in and starting to deploy or equivalent of Facebook coming on Web3 itself, you require all the toolings you need, including AI, as I said earlier, right? And you have to be positioned for that. And I think StackOS is wonderfully positioned for that next cycle, which is going to be for infrastructure, right? Creating a real stable position of infrastructure, which is enterprise grade, and also be able to scale the requirements. Also taking into consideration that there is no product in the market which can do all the new toolings which are supposed to be working on Web2. There is no equivalent in Web3. And I think that is the beauty of where we are, the space we are in. And this bear market is actually, some people will call it still like a mid-cycle direction, right? But what this is, this is beautiful because that's where all the noise goes down. You can still keep focusing on your development and also be able to really produce results which are going to last for much longer time. So I'm really excited about this.
Yeah, and also building communities, right? I feel like it's now the people who are there for the technology stay in the community and talk about the platform and how to make it better. I think that's a great opportunity for Blindex and StackOS.
Absolutely.
Yeah, absolutely. I think the bear market indeed enables the builders to focus, concentrate, and being able to build instead of answering all this endless messages. When Moon, when Binance, when whatever, which obviously is typically coming from the wrong audience. And at the same time, bear market is also filters out all the people who are here for all the wrong reasons. And it over time it does bring more people who are convinced that this is the right way, this is the path, and then this is where the real grassroots communities start. And I agree, the best projects out there, they all started or were substantially built during the bear market. So for everyone who's really serious about it, bear market is not really an obstacle. It's I think it's more of an opportunity.
Yeah.
One thing I would really give, this is a perfect time actually for this AMA because we seeing what USD is doing right now, right? It is just amazing to see Blindex, all your stable coins are exactly almost to the peg, right, and unaffected pretty much by the market. So and one thing which I would really applaud Blindex is that they have the 100% of the entire Blindex's app, right, runs on StackOS, and that is something very, very fascinating about it, right? They have not taken shortcuts, right? It's very easy to take shortcuts, but in fairness, I think it's a shortcut to use StackOS than using AWS itself, because it is that easy. So I think that's kind of the strength, I guess, which Blindex has tried to build as foundational layer as well. And it's not just like the front end app deployed. They have got so many backend services, and they're just growing every single day, adding more services to the backend. So which is really, really good to see.
Yeah. What is your curious, Omer, and what has been the experience running on StackOS and kind of interacting with the team from your perspective?
I think from our perspective, when we started the whole journey, like Andre said in the beginning, it was very important that everything that we're doing will be 100% decentralized, and StackOS obviously provide that ability. I think Blindex is one of the more heaviest users in the variety of services that StackOS are offering, and we are basically essentially we are building everything on StackOS, the front end, the back end, the analytics, the smart contract, everything is relying on StackOS, and the whole the variety of abilities and the variety of apps that can be built on the StackOS is amazing, and the availability of the team was for us, it was was really great because we had the accessibility and the breadth and the length of the team to help us scale everything and scale the features and the services, and we are looking forward to grow together with StackOS on top of that. I think that's what you're doing is very, very hard to build in a very good way. So we appreciate your effort immensely, and we are looking forward to grow together.
Thank you.
Awesome. Yeah.
Yeah, and I mean, from our perspective, our projects are quite, have very, very similar goals in mind, both in terms of decentralization, but essentially helping the world to be a better and more accessible place. And in the similar way to StackOS that is building the compute infrastructure, we're building basically the like DeFi and investing infrastructure on top of it, but making again everything kind of one-stop shop, very accessible, very simple. And again, it's a journey of 1,000 miles. It all starts with a single step. We all know that it's very, very difficult to take this first step, but once you're on it and you're committed to the journey, it's you're starting to actually have fun along the way, which is also very, very important.
Yeah, and Andre, when did you get super interested about decentralization? Was it something that grew along the way since you got in? Was there an event?
Yes, I mean, I've been kind of in and around the traditional financial system for a while, and like for example, I only had one corporate job, and I only took it to get to know the enemy. Okay, so it wasn't like, I mean, everyone knew, including everyone in that company, that I'm not going to stay there for more than 3 years, which kind of, I think on the day of the 3 years, I just quit and then started, my probably 5th or 6th company in a completely different country. I think it's important to understand what you are disrupting before, rushing into disrupting. And I think that there are a lot of young entrepreneurs in the crypto space that don't have that experience and understanding of what they're actually disrupting. So sometimes they're running a little bit too fast. And as Vishnu said, it's very easy to cut corners and to find shortcuts and stuff like this. But there is a price. And I think today, looking at what's happening with the UST and Luna, which I think again affects the whole market very badly. So I mean, even though we're in theory competing, around one of the competing stables, but we actually find no pleasure at all in seeing UST losing its peg and Luna collapsing, because it's not a zero-sum game. First of all, second, such a large-scale events, they affect the whole market, and more importantly, they affect the confidence in the crypto markets, which I think is fundamental for all of us, or really are here for a reason, and not just to make a quick buck. And for that reason, I think it's quite unfortunate. I mean, I do hope for them that they'll recover, even though, I mean, at the moment it seems technically a little bit difficult, but it's still probably doable to some extent. But the confidence has been shaken, and by association, a confidence in a whole bunch of other platforms and other stables have been shaken as well. And it will take time to repair this confidence. And that's why I think, again, it's very important to really spend the time planning ahead as and kind of simulating all these black swan events. Like, I mean, Bitcoin the dropping 50% is not really a black swan event. It's something that is quite expected. Okay, black swan event by definition is not expected. So even though we use this word quite a lot, but it's actually kind of lost its meaning. But to simulate the trivial things is very important, because if you're not kind of simulating your worst possible case scenario, then you're obviously not going to be prepared for it. And in theory, and over tweets and all of that, it's very easy to say, yeah, it's all going to be fine, and we're backed by this, we're backed by that, we bought $1 billion worth of this, and but then you find it the hard way that the market forces are much stronger than you, and there are always players out there who, for financial gain, would try to use these forces against you. And for example, if what I've been reading today is true about either a single player or coordinated effort to basically get UST off the peg and crash Luna are correct, whoever did it didn't commit any offense. First of all, because crypto is actually unregulated, and second, because, well, they didn't do anything really wrong. It's not like they exploited a smart contract weakness or vulnerability. They just used the market and made a profit out of it.
Andre, maybe we should explain a little bit about what happened. Given some background on what exactly happened in the last 48 hours, 73 hours.
Yeah, sure. So basically, okay. So let's start with kind of things that sometimes we take as quite obvious, but maybe to some of the audience they're not that obvious. So a very big project that up until literally like 12 or 24 hours was in the top 10, called the Terra. Despite the name Terra, their token name is actually Luna, which is moon in I think in Spanish, also in Russian, but
In Latin.
in Latin. Right, and of course it comes from Latin. And the main aim of this project is to create a USD pegged stablecoin called the UST or US Terra. And they've been quite successful again up until literally a few days ago. And they have built a stabilization mechanism, which up until recently was considered to be kind of
Pretty safe.
But
yeah,
exactly. So everything is pretty safe until it's not. But basically, the way their stabilization mechanism works is that you can redeem one UST for $1 worth of Luna at any point in time, and basically by promising that and fulfilling that promise, the kind of theoretical assumption was that the depeg should not happen, because if it depegs downwards, so you can basically buy UST for cheaper than $1, redeem it for $1 worth of Luna. One thing that they did forget, the last bit of that equation, that you actually, in order to get back to your $1, you need to sell Luna. Okay, so it does create downwards pressure on Luna, but Luna performance has been quite good up until very recently. So I think its all-time high was at about $120 or so, and basically that all-time high was in a kind of early April this year. Okay, so we're not talking about 2 years ago it was a great project. It was actually up until kind of a month ago it was an amazing project if you look at the graphs and all of it. So it was $120 basically in April, and then the market was going down a little bit, but again that's expected. Basically up until about a week ago they were still trading at $85, which is I think would be on par with the pullback in Bitcoin and Ether, etc. And UST was stable at $1, no movements, all good. And then a few things happened that eventually caused it to lose the peg. I can go more into details if we have time and interest. But eventually, fast forward to today, at the moment, Terra is worth literally on this second $4.50. When we started this call, it was about, or maybe 15 minutes before, and it was 85 cents. Okay, so from $120 to 85 cents in about a month. Okay, but actually, it was from $85 to 85 cents within a week. Okay, so that's for those of you who are counting, it's minus 99%. So probably it's as bad as it can get. And the reason that happened is because this kind of vicious cycle was created with people redeeming more and more of their UST for Luna, and then selling Luna, so applying more pressure. So then the guy next in line would get more Luna and will sell more Luna and will dump the price even further. So I'll pause for a sec with the Luna and UST saga, and I'll just draw kind of some correlation to Blindex and to the way that we designed the stability mechanism in order to try not to kind of try not to get into the same boat with them. But it took us actually about, I think, a good year and a bit to just improve the stability algorithms and review them before launching into kind of like a soft launch beta. And only after running a few months in production, we kind of said, okay, so we think now it's good enough, so we can start opening it up to like the general public and scale up a little bit. But the most important bit here to understand is that what happened and still happens in Terra, in the newest T, is basically it's called bank run. Okay, so this is a term that is taken from like a traditional finance, and it basically means, or it's a scenario where basically a lot of people literally run to the bank in order to withdraw cash, and they take their cash out of the bank, and they do it in case where there is either a rumor or a good reason to believe that this bank is going to go bankrupt. So they just want to withdraw their deposits before it's too late. And in the traditional finance, most of the banks operate in what is called marginal or fractional reserve model. Actually, I think it's called marginal reserve in traditional finance. And in most of the jurisdictions, this marginal reserve is anywhere between 7 to 11 or maybe 12%. Sorry?
The US is 10%.
Yes. So basically, again, roughly, let's say on average 10%. So that means that for every dollar deposit into the bank at any point in time only has 10 cents of it, which basically means that even if only 10% of the people want to withdraw their deposits, the bank is gonna be completely cashless, and not for the good reason. So this bank run, basically in real world, if it happens, the bank is done, and we've seen in not too distant history things like this happen. For example, a few years back in Cyprus, where the government basically had to literally shut down the banks and limit the withdrawals to, like, I think €5,000 per month per account, no matter whether you're a company or individual or whatever. And even in more recent history, it happened in Canada, where after that emergency act that was invoked by their prime minister, a lot of people try to get cash out of the ATMs, and then literally overnight there were like thousands and thousands of ATMs without any cash in all the major banks in Canada. So we're not talking about something that is only happening in theory. It actually happens in the real world. So that's traditional finance. That's the bank run. And when we were coming to discuss and consider stables, so bank run is obviously very, especially if we're talking about stables that don't have 100% backing with fiat or with any other asset. But it's actually mostly with fiat because that's what they're pegged to. So what happens in this case, if everyone runs to the bank and tries to redeem their stables for whatever collateral there is, if there is any, if there is any, even a little bit of incentive to try to be the first in line to redeem, rather than to be the second one or the last one, this design by nature creates an incentive for that bank run, and basically then it creates this vicious cycle that is only going to stop at zero. Okay, nothing else. Yeah. Nothing else is going to stop it.
Snowball effect.
Yeah, exactly. And that was one of the first changes that we've done in Blindex, because we forked another project which is called Frax, which I think up until today, including, did the best job in creating an algorithm for like a stable asset. But we did a few things differently. So Frax, first of all, it only has a USD pegged, which is Frax itself, and it's about 80 and a bit % backed by USDC, effectively. So it's essentially, you can look at it as like a kind of wrapped USDC with a few additional features which are quite nice. In Blindex, however, in order to stay true to our vision of complete decentralization, so first of all, we decided that we cannot be backed by USDC or by any other stable that is centralized or has a centralized custodian and essentially can be stopped. So we said, okay, what are the assets that cannot be stopped? We could, at that point in time, and that was again about a year and a half ago, we could only think of two. One is Bitcoin, the second one is Ether. And even in Bitcoin, outside of the main Bitcoin chain, it's actually non-trivial to get a hold of a truly decentralized Bitcoin, because for those of you who are familiar with the WBTC, for example, wrapped Bitcoin, it's completely centralized because there is actually a custodian who holds all of the Bitcoins that are backing every single WBTC. Which means that, again, there is like a single point of failure, both technologically or from like a fraud or a hack perspective, but more importantly from a kind of a government or regulator perspective. So this protocol can be stopped. So we decided to put the extra effort into it and launch on a chain called RSK or Rootstock, which is a Bitcoin side chain. Again, not the most obvious chain, definitely not the most vibrant DeFi ecosystem there. But as we said, there is no cutting corner here. So that's what we did. So we did launch on Rootstock. We do intend to go multi-channel in the next few months, hopefully. But the mint and redeem will still probably stay on RSK until we'll find another way of how we can get a hold of a Bitcoin in a fully decentralized manner.
Yeah. One thing, like, for the ones who don't know, Rootstock RSK has been developing for a very, very long time, right? So they have really nailed down what they're supposed to do really well. So they're basically, they are using the Bitcoin chain and the miners to be able to build smart contracts on the Bitcoin chain. So that's Rootstock. And it's, I met with the team actually in Argentina. This is 2018. So it's a great team, a great product, and I think that's a really job.
Yeah, no, I agree. They did a great job, and it's the only chain where you can get a decentralized bi-directional peg in and out of the actual Bitcoin. And but at the same time, it's EVM compatible chain, so you can run smart contracts on top of it, and that's why we could actually launch on RSK. So from the a technical perspective, from security perspective, RSK is arguably probably the second best chain out there because it has about 65-ish% of co-mining with the Bitcoin, which basically makes it, again, probably the second most decentralized and secure chain out there, even more than Ethereum, second only to the Bitcoin itself. But anyway, because of the fact that we are now handling a volatile collateral and trying to create stable assets backed by it, so we actually had to face a whole bunch of kind of challenges and obstacles that Frax, for example, didn't have to face. But Terra, with their UST, they definitely had to face the same obstacles because, with all due respect to Luna, it's a volatile token, and again, we just saw how it can drop by 99% in 1 week. So it's a bit of an issue.
Interesting to add on that, Andre, is that they, in the last couple of months, they were holding and buying Bitcoin in order to back their reserves. And part of what happened in the last couple of days, they were depleting their Bitcoin reserves in order to maintain the peg. And once the whole reserves were depleted, the token even crashed even further because the loss of trust in the platform, in the ecosystem, in Luna, in UST, did such a big effect on the whole ecosystem there, and the cascade was so I think strong is the I'm not sure that strong is amplifying enough what's happening there, is that even $3.5 billion worth of Bitcoin that they bought in order to have some collateral that backs their holdings didn't last. It lasts for a few hours, and then it kept crashing.
Yeah, so that's a very good example for them trying to kind of retrofit or patch the inherently flawed design of their stabilization mechanism. But the funny thing is, well, I mean, it's not actually funny, but more of an unfortunate thing is that even though they bought all this Bitcoin a day, I think they became probably the single biggest holder there, the LFG, the Luna Foundation Guard of Bitcoin, but they didn't have the mechanism to really use this collateral for the redemption process. Okay, and this is one of the reasons why their only way to kind of try to prop UST was to sell the Bitcoin, further accelerating the dump of the markets, because obviously Bitcoin is the most liquid asset and the one that is traded the most. So it just was kind of adding more fuel to the fire.
Yeah.
But coming back to Blindex, so one very, very important thing for us was to disincentivize, or maybe not exactly to disincentivize, but to remove any incentive for the bank run. So basically, essentially, to remove incentive to be the first one in line to redeem. And we did it by again enhancing the algorithm and creating something which we call effective collateral ratio. So we have the collateral ratio, which is the algorithmic target, and then we have the effective collateral ratio, which is de facto what's happening right now in the treasury, in the particular pool of the particular stable. And we made sure that upon redemption, the users will not get the target collateral ratio, which might be completely disconnected with reality at this point in time, but they will get the lower of the two. Okay, and they know it in advance. It's all transparent in our documentation and our communication, all of that. So essentially, what it means is that Blindex tables, they definitely can depeg. There is no magic formula to prevent depegging, but sometimes it's actually much smarter to build a mechanism which is flexible rather than trying to build something which is fixed but the moment it's breached, it shatters. Flexible mechanism, can kind of expand and contract and still maintain intact. And that's what we've done with Blindex. So basically, we just made sure that no matter whether you're the first one in the queue or the last one in the queue for redemption, you will get exactly the same pro rata of the underlying collateral. Now, in extreme scenarios, you will get less than $1 worth of the collateral. And again, it's given. We're not trying to hide it. We do have our own a platform token called BDX, which is the one that is making up, or like we call it shock absorber. But even that token, there is no guarantee that it's not going to go down to zero or that we'll run out of it, because again, unlike Frax, we actually limited the amount of BDX that can be minted, and it's also limited for every pool of stables that we have. So the pools are completely segregated from each other. So even if one pool bankrupts, it doesn't affect the other pools at all. But anyway, so that was very, very important stabilization mechanism to basically just remove any incentive to be the first, because essentially most of the people who are kind of long-term in crypto anyway, they know that Bitcoin goes down, it goes up, Ether goes down, it goes up eventually, and as long as they're getting some yield for their staked assets, or just using them in some manner, they don't really care whether it can be redeemed for $1 in every given moment. They just want to know that the protocol in general can be trusted. Another mechanism that we introduced were incredibly and ridiculously long lockups, voluntary lockups. So in DeFi, most of the protocols, they ask to lock up your stakes for anywhere between 7 to 14 days. Some kind of more ambitious, like Frax, for example, their longest lockup is 3 years. So we introduced lockups all the way up to 10 years. And some would say surprisingly, I would say not surprisingly at all, because it was done by design. Almost 74% of all the TVL on Blindex is locked for 5 years and more, okay? Which basically means that no matter what happens, even if everyone else, and by the way, the other 26%, some of them are also locked for like 3 years, 2 years, 1 year. Only relatively small portion is completely unlocked. But even if all of the other 24% will run and redeem, we'll still have 3/4 of our treasury left because they belong to the token holders whose stakes are locked. And this Bitcoin, this Ether is not going to disappear. We're not going to give it to someone else because they are redeeming it first. And that's another mechanism that helps keeping the stability on top of all the regular algorithms that making sure that the arbitrage players are leveling the market, leveling different pools, and all of that stuff. And yeah, go ahead, Omer.
Sorry, I just wanted to add that to emphasize that what was important for us is to make sure that we are making the mechanism as fair as possible. So the first one will come, and the last one that will come will get the same share. And obviously, we can't do we can't stop bank run 100% of the time, but we can incentivize users to understand that it will be less likely to lose their money if they will come later, or if they will wait and give the protocol time to recover, and that will give us time to help and strengthen the mechanism, the platform, the stablecoins themselves. And I think that was important for us to make it as fair as possible.
Yeah, that's great, because you see, once panic kicks in, it's like an avalanche, like Vishnu also said, right? Once it kicks in, and if you have reasons why they shouldn't panic, that's just great.
Makes things worse. it exacerbates things situation.
Yeah. So in addition to that, you guys talked about gold peg and British pound as well. What other things have you guys coming up?
So I think that the exciting part in Blindex is creating multiple assets. So yeah, like you mentioned, we created now a British pound stablecoin, a decentralized British pound stablecoin. I think it's the first ever decentralized British pound stablecoin out there, or fully decentralized, and the first ever gold peg stablecoin that is backed by Bitcoin. So that's the other two major stablecoins that are pegged to gold, Tether Gold and Paxos G, are backed by physical gold, and you have to maintain physical assets. Here you can actually just maintain your money in crypto and invest in gold and diversify your portfolio and hodl gold as well in times where the market is crashing. Usually gold counts as a safe harbor to investors. So that was important for us to showcase that we can do that as well. But it doesn't stop there. Like, I know you can imagine, for example, if you want to invest in a NFT series where you can't really afford to buy an ape, but you want to buy a part of an ape, or you believe in what the yoga labs are doing, and you want to invest in them by investing in their NFT series, then essentially you can peg your money to those NFT series by holding a stablecoin that is pegged to that series. And by that, we're actually creating a new investment tools for users. I think that's something that is very cool. It's something that it's very hard to create, and to have that tool that is actually pegged to that prices and remain pegged. That's something that will be in the future very exciting for a lot of communities that will want to expand what they're doing, especially if they can actually get more dividends on top of that. That will create more and more partnerships to Blindex, and potential collaboration can be immense, I think.
Yeah, and even make the community more enthusiastic, more spreading the words, and that's awesome. Also, for houses, right? If you can afford a full house, like in the Netherlands, like the house prices are exploding. If you at least as an investment vehicle, would be great to use Blindex. Yeah.
Yeah, so that was definitely one of the kind of the use cases that we envisioned, when building and designing the different algorithms, the different products, that we can essentially tokenize everything, whether this asset exists in the real world in this particular form, or whether it doesn't, because that's the beauty of the blockchain. We can do a lot of things that in traditional finance are technically impossible. For example, let's say you are aspiring to buy a 2-bedroom apartment in Amsterdam, okay, in a particular neighborhood. So and as you said, real estate prices are going up in Netherlands, but let me tell you that it's not the only place in the world that is going up. Here in Sydney, it's exploding. I just came back from Israel. It's going through the roof over there. I've heard my friends in Manhattan that it's nuts. I think there aren't too many places in the world where real estate is not going crazy. There is obviously a very, very simple explanation for that. I mean, you can't keep printing money, like there is no tomorrow, and hope that nothing will happen. And suddenly everyone is surprised that inflation kicks in, and it's almost double digits in US, and I mean, to me, it's completely expected. I'm not sure how all these smart, guys, the economists and Treasury and the Federal Reserve, how to them it wasn't obvious that it's going to happen. But anyway, coming back to the real estate, so you're trying, to save for that 2-bedroom apartment, but the problem is the price keeps going up, and you don't manage to chase it at an adequate speed. So with Blindex, you would be able to tokenize that apartment and buy it kind of, bit by bit, block by block, essentially. And the protocol will make sure that the value of that token is pegged to the price index of that particular type of apartment in that particular suburb. And that's something that, as long as we can get a reliable price feed and create an oracle out of it that is externally verifiable and everyone can see the price and not believe us, but actually believe the data that's coming from the market, then it can be tokenized. And if it can be tokenized, then you can start buying in small chunks, exactly in the same way as you can, buy Bitcoin bit by bit, Satoshi by Satoshi, and that's fine. It works in a very, very similar way. And behind the scene, we're developing a kind of different investment strategies that basically utilize the excess collateral or collateral for tokens that are locked for a long period of time in order to generate yield. And this yield helps us remain in peg with assets which value is increasing. So it's not like a magic that we said that, it's pegged and then it's pegged, forever. There are actually real life mechanisms behind it that help us maintain that peg. And if there is excess yield, then we can even turn these tokens into yield bearing tokens as well. So imagine that, you invest in let's go back to gold for a sec, but let's say that you buy a gold, gold token on Blindex, and you provide this liquidity and stake it. So on top of being pegged to gold, you can also yield an extra interest on top of it if the strategies are performing. So that's like a win-win for everyone. You're pegged to gold, you're getting yield that you're not getting anywhere else in the world on gold. And at the same time, that everything is backed by Bitcoin. So, you're still in your comfort zone as a crypto native.
Awesome. All right. I see almost an hour now. I would love to hear a bit more about the governance side of things for the decentralization. On Twitter, I sometimes see these votings coming by for Blindex. And I know as StackOS, we're also going to do something similar to that. But can you guys tell a bit more about the governance in Blindex? How do you get votes? Are you going to improve it maybe even in the future?
Absolutely. Omer, you want to talk about it?
I can start. I can start by basically, essentially now, or maybe I should start with the ideologies. Ideally, what we want to do is create a platform or a project or a community that are bound together. And everything that we've done from the beginning was for the community. We've launched a fair launch project, so we don't have any pre-mined tokens that were sold to investors or anything like that. And everything that we are doing is very openly discussed with the community. And bit by bit, we are moving the responsibility and the governance over the protocol to the community. And all the major decisions on what will be the next stablecoins that we are issuing, where to invest the surplus of the protocol, what should we develop next, and what should be on Blindex agenda, or what kind of partnerships should be developed, and even further than that, how the whole concept and the whole management of the community will be handled. Everything will be moved to the community and governance decision. So right now we are doing it bit by bit. In order to participate in the governance, you need to hold BDX, which is the utility and governance token of Blindex, and it also used to mint new stablecoins in the platform. And you can essentially vote, you can participate, and you can vote through Snapshot and participate in the governance itself. At the moment, we are planning to build a vesting mechanisms and a staking mechanism for BDXs. So you will have a VE, BDX, and you will get more and more rewards once you do that, and once you participate more, you will be even further rewarded. I think that's important for us to have the community involved and to reward them for that. Did I forget anything, Andre? You want to add something?
No, I think you got it pretty much spot on.
Yeah.
Cool. Vishnu, do you want to lift a bit of the veil of what your ideas are about governance and what's for StackOS? You're on mute.
So governance is extremely important for StackOS, right? Not just because community really wants to see governance, because thanks to governance, there's going to be a lot of token burns on StackOS, right? So I think community is really looking forward to getting the DAOs to work soon, right? But structurally, we are architecting an interesting mechanism how you can hold identities while you're also owning the governance, right? So the thing is, here is some facts about governance, right? And it is that people need voices, right? And people need representation. And I think which is somewhat of an issue in an existing structure of governance, right? People have votes, people hold tokens, and usually they are used to vote. But I think what is missing is an identity. The thing is, a platform is successful when you know there is an identity who's proposing something, and people can rally behind an idea, and not necessarily by random votes coming in, right? I think opinions matter, and I think way we are looking at this is not just in terms of tokens, but also using profiles which are anonymous, but yet based on their historical performance or the participation in the governance, to be able to identify those individuals and use that to really reckon with the voices, and then also be able to build ecosystems. It's much like if you will, you talk of DAO, you talk of in general about how governments work and operate, right? I mean, there are few people who actually make the call, but the votes are taken from the individuals, right? But StackOS is not exactly that. It's not like there is going to be a president who's going to make the decision, right? But it's more like having profiles or identities which you can relate with, and then and also be able to understand, okay, what, this is the personality, he has done right by so and so things. It may be something you want to consider, and based on that, make your votes, right? So I think that's what I created. When we as entities like Omer and I and those on the team, may not necessarily be the ones really making decisions, right? But we need individuals who would be quote unquote also be able to participate or have a historical performance of how ideas have been perceived of theirs, and then they're able to participate, and then people can really think about that as well. So I think it's a combination of how you can really have identities who can who can explain ideas and see the historical performance, while also having a good faith of having the tokens which you have to be able to make, along with few other things, to be able to really have a vote or say in the network participation. Again, we're already seeing this thing from the decentralization as well, right? From StackOS and the new communities which are joining in to start building on the StackOS protocol. We recently have 0x Carbon, which is coming in and trying to start building on StackOS, right? And we also have like Decode Foundation also rallying up to start developing on the protocol itself. I think this is an excellent position to be in, and I think we would be creating models where the DAOs would be creating those ideas, but there'll be organizations across the world with their own identities deploying and developing products. And once they are all approved, it can be deployed on the protocol itself, right? So I think that's a very, it's structurally complex, but I think it's important for the real long-term sustainability of the protocol. So I think that's kind of, I think how we look at it at this point in time, and we are working on that as well.
Sounds good. So despite the market turning down, there's still a bright future.
Yeah, I mean, we need to keep building, right? I think So this is not the first bear market. We have built during the last bear market as well. Right? We've been building since 2016, 2017 actually. And when the market was completely on its run, we were there throughout the bear market, which came after. And then we are still here and building. So we are super excited about that. As I said, that is, it's a great time for actually really start building and focus on the product, right? And it's just a beauty of this thing. But there is one YouTuber I kind of admire. His name is Benjamin Cohen. Iman calls him my best friend, but I don't know him personally. But there's one thing which he says. He says, bull markets make you money, but the bear markets make you rich, right? And that's a very interesting way of looking at it, right? People who really stick along and building from the time when there's nothing really there are the ones who really are successful in the future. I know if monetary gains is what you want to think. But I think it's something interesting. It never makes me sad. It's just I just feel more excited about it. And honestly, I think we require a correction. If you don't have corrections, you'll have worse corrections when it just keeps going up. Right? So I want this thing to be more sustainable. Grow sustainably as an ecosystem and as StackOS as well. So a lot of things in development are in development. We are talking about the marketplace. Hopefully, in a few days, we'll be giving out some of the screenshots of what we have. We have our AVAX integration or Avalanche support on StackOS, which is also hopefully could be soon. A lot of our protocol level changes are done. Our smart contracts are being tested. So that's going to be really good. We have from the marketplace. Hopefully like shortly after, or before the AVAX, I think we'll have the marketplace release as well. And then maybe we will start seeing the rewards coming in for USD, in Ether and Matic as well. So, hopefully that'll be something interesting to watch and see how people react to that. Along with that, we have a lot of in progress work. So we are working on, ensuring that we're able to do multi-cluster operations. We're also able to open the new cluster operators across the world from the community side of things. Also be able to deliver on creating this a trusted environment, right? So where you can ensure that no matter what apps are deployed by the cluster operator, it is completely anonymous to every single being in the world, right? Including the cloud operators itself. So so I think there are a lot of things which we are doing, and we have a long journey ahead of us, and we're positioning ourselves as one of the leaders on the forefront in this space. StackOS, I think for the ones who have heard from this maybe sometimes, and also from a communication point of view, StackOS is the world's fastest growing D-Cloud provider. It is also the largest provider of D-Cloud in the world, right? So it's just about time that we will we'll see all the metrics really shine, turning green, right? And I think we're just building for the same, and super excited about that. One thing which I really want to maybe just kind of hint around is that D-Cloud Foundation has quote unquote is suggesting that they'll be investing or funding or providing grants to projects deploying and building on StackOS. So for all the developers out there, reach out and let's see how we can really build a strong foundation for the StackOS protocol.
Awesome, thanks a lot. So community members who are listening, feel free to ask your questions in the chat. And if there are none, I don't know if you guys have something, another topic you want to talk about. Or...
Meanwhile, I think we are witnessing something that is fundamentally going to change how people are looking at stablecoins now. I think that what's happening with Terra might even affect the regulators on stablecoins. So I think that it was Ryan Adams from Bankless that says that we're going to see more and more regulators, specifically in America, looking into stablecoins. And now they're not going to differentiate between algo stablecoins and fiat-backed stablecoins or partially collateralized ones. We're going to see a huge effect on that. That's my estimation, and I'm curious to see how the market is going to react to that.
It's still going to be a bit more difficult to regulate fully decentralized stables.
Yeah, and it's something which I usually bring up, right? And this is something which happened a few months back, like 6 months back, 5 to 6 months back. Uniswap delisted all the security tokens from their website, right? The Ethereum, blockchain itself supports all the security tokens, but the UI does not, right? And that's ironical because the founder of Uniswap, his account is at the jurisdiction of the US was, right? And they basically, the SEC was pretty hard on them, like, hey, you know what? If you continue to do security tokens on your website, it's going to be a problem, right? And that's exactly what StackOS is coming up, trying to provide an infrastructure that you don't have to have your founder's AWS account used to be able to really create or run applications. Because here's the fact, right? Is the only way you can really decentralize infrastructure or your application or user interfaces, backend services, oracles, and everything. The only way you can actually decentralize this thing is if you're not using your own founder's account to run your apps, because there are situations where the founder is not going to be there anymore. There'll be situations where some organization protocol will be like, hey, you know what, the regulation is coming on really hard on us, so we really need to stop the service. Or there'll be situations where entities would feel that it's probably just safer as an individual to be able to just not do it, right? So I think that is an interesting bit, I think, which StackOS really brings in, is how do you really get give the power to the DAOs or the governance to really own the deployments on this entire crypto space. So it won't be like Omer or Andre has account on StackOS or anything of that sort. The DAO owns the user interfaces, and that can be controlled by the DAO. So I think that is the power which I think StackOS is going to bring in. It's going to fundamentally change how people see this, and we are super bullish and really building for the same vision. And if you look really right in the next coming decades, right, and you will see a great influx of the Web 2 companies or present Web 2 companies having the equivalent of Web 3. And you will need all these toolings which are required in the Web 2 world. And let's be honest, the state of Web 3 right now is basically having a UI, and then they have a blockchain which has data, and then they have their servers sitting somewhere, taking the data from the blockchain, putting it on a database somewhere, and then using indexes or elastic caches in front of them to really serve the data, and then they call themselves decentralized, right? And that's by no means like decentralized servers, right? And you can might as well just go change some numbers on the database and say, hey, you know what, this is my decentralized product, and you can just manipulate the way you want it. So I think that is the uniqueness, I guess, we are bringing, or capabilities we're bringing into the space where they can start doing it. You can't have games which require, services where, or decentralized game which is sitting, whose source code or even all the AI inputs which you get is sitting on their own computer, right? Or on main server somewhere. And just having the UI sit in front of you on your desktop and say, you know what, it is a client-based UI and everything else is on my server. It doesn't make any sense. You would want to have an ecosystem where you will see or have this entire AI machinery on a decentralized protocol where you can start using and giving back responses. And blockchain can't solve the problem. Let's be honest. Right? I think we have to find solutions which can really address this. And that is I think how we are going to be seeing the next wave of a real implementation. And the way StackOS is presenting itself is not just for Web3 companies, right? We currently, at least 20% of the companies which we know are deploying on StackOS are actually Web2 companies itself. And they are not really Web3 companies, they're Web2 companies pretty much. And I think the reason why they use Web3 services like or Web3 infrastructure like StackOS is because DevOps is darn expensive. Let's be honest, right? I mean, you have for someone in the US, if you have a startup in the US, have a DevOps engineer which you require, let's say, 24-hour support, at least 3 engineers. It's about $70,000. It's like I mean, just quarter away from $1 million. That's an expensive resource, a DevOps engineering resource to be there. You solve that entire problem by not needing DevOps engineers. You don't have to have your startup time, boot time on StackOS, and Omer, I know they have deployed, and they can probably tell this as well. But once the image is ready, it takes literally seconds, or if not minutes, right? I mean, seconds, if not minutes, to really have app running on StackOS. And traditional world, if you just go and start saying, you know what, I will use my AWS account to start deploying apps, you have to hire an architect, first of all, the cloud architect, and hopefully he'll be able to design something for you. And that will take, at the minimum, for the best of the guys, the best of the engineers, it takes at least 2 weeks time to be able to get that infrastructure set up, right? And that's its own expense, right? And that is the interesting bit. You give velocity to projects, you bring in, not having to require these DevOps resources. And that is kind of how we're positioning. We're seeing deployments from Web to world. And honestly, we're talking with some partners right now, which is going to be really game changing for the entire ecosystem. And I'm sure people will hear about that in the next few weeks or maybe months.
Yeah,
Vishnu, to give like a relevant example for today. So obviously, one of the hottest topics, as we discussed, is the Terra and the UST thing. And I was just I'm constantly like on CoinGecko on the UST page, refreshing it. In the last hour, out of that hour, I think for 50 minutes, this page was down. Okay. And it's CoinGecko. I'm not talking about some like forgotten website, and that's the place where people go to get their data for. So this is an excellent example of why services like StackOS are really needed, because we just need to do much better than what we're doing today. Because as you said, today's Web3 is basically Web2 with a blockchain as a database. It's not we're not there yet. We still have a fair way to go.
Absolutely.
Yeah, I think the key here is that decentralization is a gate for freedom. So it can be a financial freedom, it can be freedom or ownership over your data, freedom of on deployment and building, and it's like decentralization is the gate for freedom. And if we cross that, if we embrace that, then we can have freedom in all of those aspects. And that can be in architectural layer of design, or launch whatever service that you want, own your own data, own your own financial tools, or your money, ownership over your wallet, basically. So I think in all of those aspects that decentralized can lead us to, I will carefully say, to a better world, but in a carefully manner.
Yeah, I think all innovation is great, right? I think there are always, I mean, you can talk of any innovation. It has a dark side and it has the positive side. And on almost every single scenario so far, the benefits which it gives you outweighs any other negatives which actually happen. Right? So I think innovation is good, right? There will be time where we would see a place where there will be artificial intelligence singularity, right? There will be singularity for that. I think you will see human beings really combined with AI and being one, literally. And in fact, I would even go as wild and say that we are kind of cyborgs even today, all of we don't need any more, we don't necessarily need to remember everything now. We have everything on the fingertips, right? Any information you want, you know exactly what's happening around the world. And you can make decisions on that. I think we are at the point where we have a data source coming in from so many places, and then you have your own brain to process it. But you are seeing more and more, more and more places where the brain's capabilities are being replaced by softwares and toolings and calculation, mathematics, all done by not really in the brain, but you respond with the data you get back from it. So, so I think innovation is great, and I think that's what you're positioning for pretty much.
I'm looking at the chat. I think this is pretty easy one, Vishnu. Does the OS in StackOS mean they are a part or would like to be a part of Apple?
So OS stands for operating system, and stack stands for application stack. For the ones who, this is a technical meaning, stack OS in combination is an operating system on the blockchain space, of course, for any application in the world, right? So stack OS pretty much can deploy and run any application in the world. So that's how the stack OS comes into play. And and maybe what, I would just put a statement differently. The OS may not necessarily stand for the stack OS using Apple or what was the comment was? What was the comment again?
Would we like to be part of Apple?
Would we like to be part of Apple?
Yeah.
I would say it this way, right? In the future, I think we'll see Apple be part of StackOS, right? So, so I think the language matters because I think essentially you will see an ecosystem where may not necessarily even the compute which Apple folks will be using would be coming from the StackOS. Right? And again, StackOS is aiming to be the gateway for compute, which is going to be running across the world. So you may have data centers which Amazon which Apple probably would be using as well, and really enable that. Right? And right now, I think, as I said, I thought one of the topics as well was how Web2 companies really looking at StackOS as well. Also because if you look at across the world, there's so much going around with hybrid cloud, right? And nobody wants to get tied to an ecosystem or have the vendor locked into AWS, for example. So when you use in StackOS, you basically are across all the clouds in the world, and then you are also enabled to really use data centers as well, right? Which and you can be very smart about closest to the geolocation point of view. Is it running closest to the application, the user of the application, or does it do edge computing and all that? So you will probably see this time where Apple and other data center providers also would be providing or using these functionalities which are coming from us. I do see possibility where right now all of our smart cars or electric cars, small electric cars like Tesla, they are having the cell database which is owned by Tesla. Right? They have the data, and that's what they are actually pioneers there. I think we will see the system in open source tooling, which will use AI technologies building on Stack and just StackOS. And then people, the cars will be just plugging into an open source data, which they can use to start moving across the world. I think there's so much possibilities and enablement of technology that there would be companies which are really offering any centralized solution right now will be worthless, and it would probably make more sense to either provide hardware or it may be more worthwhile to create open source tooling and make it like a really good thing to have for the customers. So I think that's what we're going to see is the entire space of the toolings and the products. I think they are all going to turn into a singular mode, kind of singularity of all sorts.
Thank you for the answer. I think it's almost time to put an end. Any last words from any of you?
I think what's important for me also to mention maybe about Blindex is that you can always come to Blindex. You can mint new stable coins. you can provide liquidity to our liquidity pools and also stake in our platform. So you can earn, I think, 4-digit percentage rewards in APRs. And so we invite you all to come join into the community, help us build something which is going to be one of the most advanced and decentralized investment tools and stablecoin platforms out there. So yeah, that's all from my end.
I would like to add just this, right? I guess it's products will come and they will tweak, they will fix things, right, as they go. But you need to have a team which is going to keep building. And I think Blindex team is one of those guys, right? I think they have taken an approach of no shortcuts. They are building the tools necessary for this space, right? I think all of us will agree. All of us want stablecoins. Don't really lose the bet, right? I think and the faster this thing becomes a priority, I think the more options there are. I think that's how it's going to be really good. And one thing I know of the Blindex team, and we've been working. I've seen the professionalism and what they really care about, really creating the services which are going to last and build for the Web3 world. They're a team which is going to keep delivering. They're doing a great job right now, and architecturally, you should look at the white paper and read through that as well. I think that's really good to really learn, understand what's happening behind the scenes. And Andre, if you some of them know us, one of our advisors also. He's a hodler, right? He holds a good portion of the stack tokens that has not been sold anyone. So there are people in this space which are really sticking to the ethos of the blockchain, the mindset of having to really participate and develop and build this new foundation for the Web3 in the future. So kudos to you guys, doing a great job, and thank you for supporting StackOS and building us. And I think Omar said this earlier, we are growing every single day with each other, right? I must point that there are a lot of the functionality of feature requests which actually came from the Blindex team to really upgrade and to really improve on the services so that they can be, they can start expanding the services on StackOS. Also get stability on StackOS. So we are very architecturally talking with each other to build the right tooling, the right apps, and so it's great to be part of, have you as part of our StackOS ecosystem. And that's it. Congratulations.
Thanks a lot for the kind words, Vishnu, and thanks a lot, Iman, for hosting us. It was a pleasure being here tonight, and thanks to all the people who have been, bearing with us for the past 90 minutes. And hope to see you again.